Let's get to your top ideas. Two of them are energy, which is interesting because, as we know, energy was so out of favor for such a long time, but has had a big rally within the last year or so. So, Ensign Energy Services, why does this one stand out for you?
It was at $2.50 last February, and then by the end of March, it was less than 50 cents. It was down more than 80%. And you had the chairman, Murray Edwards, buying shares. You had the CEO, the CFO. And so we bought we bought a position as well. And if you look back to February of last year when the stock was at $2.50, and you appreciate that the companies appreciate that companies in the commodity sector are hardly driven by the commodity price, you have to go back over 2 years to find a time when the price of oil was this high. And Ensign stock back 2.5 years ago was on $4. So there is the biggest risk with Ensign. It has a high level of debt, but when you consider that Murray Edwards owns 20% of the stock, Fairfax Financial owns another 10-11%, it gives us confidence that the principals have enough equity in the company to enable it to. They'll pull out all the stops to make sure that they preserve their equity and the company survives.
Let's stick with energy, and then we'll get to your other top idea. TC Energy, TransCanada, Keystone looks like it's dead as a doornail, but give us the key factors as to why you like TC Energy.
Our thesis is that this is a company that's raised its dividend for the last 20 consecutive years. It expects to raise its dividend for the next few years at a 5 to 7% rate. It's trading at the lower end of historical valuation. You've actually been seeing insider buying in this stock as well in recent weeks. And so our thesis is if it takes 4 years for the stock to return to where it was last February, that would be about a 6% compound annual return. And you tack on the 6% dividend yield, that's about a 12% total return if you have the patience to wait for the stock to return to where it was last February 4 years from now. And what's interesting is that if you bought TC Energy or TransCanada back in the day in January 1 of 2000, and you held it to today, you would have earned a 12% compound total annualized return. And people think pipelines are pretty boring stocks, but I think 12% over the last 21 years is annualized is nothing boring about that.
No, nothing wrong with that. Boring can be beautiful for sure. And for your other idea, we go into retail. My wife and daughters will love this choice. I get Aritzia boxes at the house pretty well every day. And you've said that Aritzia has been around for about 30 years, but you think it could grow more than all that time in the next 10 years. So why is it they're so well set up to grow their business?
It's probably because their timing. They spent the last 35 years establishing their base in Canada. They've really perfected their model. And in recent years, they've been expanding to the US market, which is a far larger market. And they've got about 33 stores there compared to about 66, I believe, in Canada. Now, where their opportunity is that with e-commerce, other retailers of their price points have 300, 400, 500 stores that are struggling as people go and purchase online. Aritzia is entering the U.S. market where they've set up stores that are primarily flagship stores in major urban centers. And their profit centers. They're succeeding in these well-chosen locations, but they're also serving as basically flagships to increase the brand awareness of Aritzia throughout the United States. And so they're in a position now where instead of building out stores in all these different cities and towns across the U.S., they can leverage the power of e-commerce. And by doing that, they can basically expand their sales opportunities faster. They can have greater reach. And the beauty of e-commerce is that you're not confined to the four walls of your store. You can start selling other products. You can sell other products. You're considering bags, beauty products, swimwear, intimates, and you can also offer more colors and more sizes. So you have the opportunity to probably accelerate the growth of the company compared to what it's done over the last 20 years, 35 years.